Hey there, and welcome to the Divorce Planner Podcast. I'm divorce prep coach Alex Beatty. When you think about divorce, you probably focus on finding the right attorney. And while attorneys are a very important part of the process, when it comes to financial settlements, there's another professional who can significantly impact your financial future for the better. That's a Certified Divorce Financial Analyst, or CDFA. Today, I'm talking to CDFA Josephti Cruz of Cover Your Assets Divorce Financial Planning, all about how specialized financial guidance can transform your divorce negotiation experience and your long-term financial well-being. We talk about when to bring in a CDFA, the biggest financial mistakes people make during divorce, critical considerations around the family home, understanding complex assets like retirement accounts and pensions, and how to look beyond your settlement to build real financial independence. If you want to make smart financial decisions during your divorce and build a solid foundation for your future, this conversation has the insights you need. Let's dive in. My guest today is one of my absolute favorites. Josephti Cruz is a CDFA and wealth management advisor. She has her own firm that she is one of the founding partners of, The Wealth Garden. She oversees $77 million in assets. The girl has got it going on. In addition to not only being a professional in this world, and previously her credits read like a who's who of New York financial institutions, whether it was working with JP Morgan or TIAA before starting her own endeavor. The most important thing you really need to know about her is she's a mom who went through a divorce. So she really gets it on a cellular level, what you're going through. Josephti, thank you so much for joining me today. The statistics around women and divorce and money are shocking. Depending on where you are in your life cycle when you're going through a divorce as a woman, a lot of us have made huge sacrifices in terms of our work, our potential earning, our potential retirement, and all those things really need to be taken into account when you're going through the divorce process, as well as what the value of assets are, really having an understanding of what that means so that when you are negotiating, you're not just doing it to be able to sustain the next 5 months. We're talking about being able to see things through the lens of what I like to call the 5-5-5 rule. How's this going to affect me in 5 weeks, 5 months, 5 years, and beyond? So to that, working with a CDFA or understanding what a CDFA does is critical, right? Because the stakes could not be higher. So without further ado, I'm just going to kind of dive in and get going. The first question, and I like to think of this as like CDFA 101, like ask a CDFA. So many people discover way too late that they need a CDFA, right?
I discovered too late. Yeah.
Can you share that really quickly? Because I think it's important for everybody to know. It's like you went through this divorce process before. By the way, you were in finance. You weren't a CDFA yet. And this is part of what propelled you to get that credential.
So I figured since I'm already a financial professional, I was fine. I could figure out the finances myself in the property division. And my ex-husband, for better or worse, was pretty passive about the whole thing. So he let me do everything, right? And at one point we were talking about, okay, but do we know how to properly divide this without ripping me off? That's what he was saying. I was like, well, we can hire a forensic accountant, but I don't really think we're at that income level. But I didn't know what a CDFA is. I didn't know they existed. But a CDFA basically is the number cruncher on a divorce team. So a lawyer does legal stuff. Okay, so they know basics of divorce finances. And then a CDFA knows the financial part of a divorce and knows the basics of the legal stuff. So if you get both of them together, that's a powerhouse team. If you only have one or the other, you might be missing something.
Yeah, which is exactly what happened to, which is why you went into this, which I love. Anytime people come from a personal place, myself included, of bringing that passion and that insight is really important, as opposed to, people who don't have that actual experience. It's a different animal. It doesn't take away from other people's credentials, but it's really different. It's the difference between being a certified architect and just being somebody who likes architecture. You're going to miss all of the different outlets. You're going to miss crown molding. You're going to forget to put lighting in. And that's why you need a professional.
I voluntarily gave money away. That was the thing that I learned from. I voluntarily gave money away because I missed something. Yeah. My consulting attorney gave me the wrong financial information.
Yeah.
So based on that incorrect information, because she's a legal person, not a financial person, I gave money away.
I don't want anybody leaving any money on the table. The goal should be an equitable split, but you can't actually do that without educating yourself. And to that, like at what point in the divorce process should someone ideally bring you in a CDFA? And what are the most costly mistakes you've seen people make by not coming to you at the appropriate time?
I mean, you bring them in as early as possible, right? So when you have all your documents, I would say if you're really trying to save money, try to prep your documents yourself or with Alex. That's what you can do for yourself. And then once you have a complete financial picture, then yeah, try to bring in that CDFA to talk about settlement options, property division, separate property tracing, all that stuff. And I would say the most costly financial mistake, it's been happening a lot actually. People reach out to me after they've already partially settled their assets. It's like, all right, I already got X. I got $500,000 from this house. What else do I need to do? And it's like, well, I don't know if that was the right asset for you to get. I don't know. It's done already.
Yeah.
So before the ink is dry, before you've even signed anything, I think it's good to start early.
I completely agree with you. I get that the family home is usually one of the biggest assets that any couple, any family has when they're going through a divorce. But the last thing you want to do, and I know there's an emotional component to it for a lot of people, you've put your hard work, blood, sweat, and tears, you've created a home, all of your resources are in your neighborhood, your kids' school. But before you agree to take on any large financial commitment after divorce, you really do need financial planning before. I will say that I work with clients who I actually send to Josephti. I'm always recommending you early, like when I am prepping clients. It has been a great partnership in terms of me getting everybody ready and then them booking consultations with you moving forward. And I'm excited to tease that Josephti and I are actually building out a package where you get the two of us at a much more reasonable cost that will be launching in the next few weeks. So stay tuned for that. And then when you're juggling two roles, right? You're a CDFA, but you're also a wealth management advisor. And I think that's a really important distinction to make, that you're credentialed in both those areas. You're not a coach. You weren't just certified to do what you do. You've been immersed in the industry. You know the ins and outs as opposed to just kind of the surface, social media chatter about everything. How does this dual expertise really help protect one's financial future beyond just getting through a divorce settlement?
The way I view when I help clients through a divorce is I'm really looking long term for you, right? Just like the 555. So I'm a financial planner also. So I help clients should they want to be helped through divorce and beyond divorce. It's like, let's leave that divorce behind you and let's start this new life and get you on solid financial footing and get you living a new life that you're going to love and appreciate. So I look at it from both ways. Let's get you through this divorce fairly, equitably, and realistically. And then beyond that, okay, what are you going to end up with? Let's maximize that so that you'll be able to have fun with your kids, retire someday, and not be financially scared anymore and be more financially empowered going forward.
Divorce is really an opportunity for deep introspection to be able to kind of set the foundation for what your life is going to look like after divorce. And I find that it's a really important component to focus on as early as possible, because when you do that, you create a North Star for yourself that you can kind of draw a line to at every point during the divorce process. There's a bigger thinking of everything, which is why working with a divorce prep coach, as well as a CDFA, a wealth management advisor, a financial planner, doing these things are foundational for your life after divorce. We're not here just to help you during the divorce process. We're giving you the blueprint for then your life after so that you understand what your budget is. You anticipate any kind of gaps that you're going to have in advance so that you're not panicking. And also when it comes to finances, it's a really good time to start identifying what brings you joy and where you're spending that you should be cutting back because it's not perhaps a necessity, but it's also not a priority. There's an emotional element when it comes to money, especially when you're going through a divorce. Everything is triggering. Emotions are running high.
We'll be back after a quick break. Feeling overwhelmed about the possibility of a divorce and not sure where to start? Book a free 15-minute strategy call with me. During our time, we'll talk about where you are in the process and what next steps could be. To schedule your call and learn more about my coaching program, head over to www.thedivorceplanner.net/coaching. Let's get back to today's episode.
What kind of smart financial advice would you give somebody who is kind of feeling overwhelmed by the whole financial and asset splitting aspect of the divorce process if they're feeling just overwhelmed by those big feels?
Take it one step at a time. I mean, part of another person is part of the divorce team is a therapist. I leaned heavily on my therapist at the time because I just needed to spill my guts out, whether it was rational or irrational, logical or illogical. You know what? Who cares? Let's not even judge ourselves. Let's not let other people judge us. Let's just spill our guts to someone that's there to help us.
Yes.
So that's how I helped me.
Mm.
Another way to help yourself not be as overwhelmed is just take it one step at a time. What are you spending today? You could take 30 days, 45 days and just track every single day. Okay, what did I spend my money on today? Instead of trying to piece together a 1-month budget in an hour. Track it over 45 days if you need to. One day at a time, 5 minutes.
I love that you said that. That's a part of the work that I do, which is helping people kind of break tasks up into manageable to-do lists and stay accountable because, yeah, it is all overwhelming. And here's the news, like you don't have to be an expert in everything. All you have to do is take one little step, celebrate those small victories because they really add up. And your best investment is always going to be yourself, whether that's, working with a coach, working with a CDFA. These things are going to benefit you long term. And also when it comes to the emotional side of things, making sure that you're addressing it and separating it from the financial side and have the appropriate person to talk to about each area. Your attorney is not a therapist and they're not a coach. So don't treat them as such because they're going to bill you like an attorney.
Go to them about legalities.
Your CDFA is not going to be able to kind of walk you through what the divorce laws are, but they are going to have you educated about your financial realities and what your goals are in terms of the negotiation so that you're making smart choices. I've got a question that I just want to get to. If the spouse is giving you the house as a part of the settlement, do you consider capital gains when commission and cost of renovations needed to sell when determining how much the house is worth?
In terms of capital gains and things like that is something that I talk to with my client or clients. So I can either work with the individual or the couple and we can talk about that. So if you live, for example, in Los Angeles and you've lived in your home for, 10 years, you probably have more than a $500,000 capital gain.
Mm-hmm.
So is it advantageous for you, for one person to take the whole house and lose $250,000 of those capital gain exclusions, only to find out a year later that you can't afford the house? So these are the types of things that we talk about together, because that's kind of what happened to me. I was like, I'm going to take this house. I can afford it. And then 5 minutes later, after his name was off of the title, I realized I might have to sell this. And now I've lost half of that capital gains exclusion. So that's actually something I help clients work through and decide okay, is this a good idea? Is this not? Is there a possibility that we might want to keep the spouse on just for technicalities, just for this exclusion for a year, 2, 3?
I love that that is the example that you used. This is exactly why I send clients to Josephti, because you just offered up a really creative solution, even by suggesting something like maybe there's a world where you keep your ex on, but it's written in the judgment. I've paid them out. They no longer have ownership, but it benefits you. It protects you from that capital gains tax, from the exposure. That kind of underlines something I'm always talking about. Divorce is one big negotiation, and being able to think creatively of how you're approaching that negotiation is the name of the game to get an outcome you want. And I think a lot of people, look, I do a ton of consultations with clients, right? And that's one of the things that I find time and time again. People just think that their attorney is going to lead them or their mediator is. You need to be an active participant and get information so that you become your own best advocate. What tips could you provide for a settlement that is less than half of a typical home buyout amount? Some horse trading on assets. So tell me why it's less than half the typical home buyout, right? What agreement did you come to where perhaps you're getting something. I mean, my hope is then there was some agreement of like, okay, well, I'm going to have part of a pension. Like that goes back to the creative solutions that Josephti and I were talking about. You just want to make sure that in the long run, all assets are equal.
But that doesn't mean splitting every single asset in half.
No.
So that's where the creativity comes in. Maybe you get more of one thing versus the other. It doesn't have to be 50% down the line so that everybody has the same number of accounts. That's maybe you keep this account and I keep this account.
We'll be right back after a quick break. Subscribe to the Divorce Planner's weekly newsletter and get divorce prep tips, financial planning tools, and expert insights delivered discreetly to your inbox. Sign up at www.thedivorceplanner.net. Let's get back to today's episode.
One last question. I'm in Texas. My soon-to-be ex wants to keep the house, and he will get a HELOC and maybe some cash out of retirement to pay me off. I suggested holding until rates come down. Does this sound like a good plan? Now, I'm going to hand this over to Josephti with the caveat that this is not binding legal or financial advice because we don't have all of the details. It's just a general answer. Go ahead, Josephti.
Well, I guess my initial comment is that's very nice of you to offer that. But at the end of the day, it's like, do you trust him to do it later?
Mm-hmm.
I don't know. It could be amicable now and not amicable later.
Mm-hmm.
You know, I have a client and a friend that the mortgage is under her name. I'm not sure the ex-husband has still refinanced because it was the opposite. The rates went up. So he kept holding off on refinancing. And now what? She's still holding the mortgage, even though he owns the home. So
thank you for sharing that real world example. And I would just piggyback on that saying, whatever you agree to, it needs to be in the judgment. That way, over time, memory fades. Over time, people move on, even in the most amicable situations. They have new partners. They want to go and get a home. Make sure that you are, and I've worked with clients on this and had detailed information in their judgments, like if come stuff, here's what we're agreeing to here by a certain date.
A hard deadline. You're being generous by saying, hey, maybe you can wait till rates are lower for you. Well, he's trying to pay you off, right? But what if the rates don't go down for 4 years? Are you still going to be patient at that point? So it just depends.
Details. Can you negotiate assets that are hidden even if they are all not found? No, you can't negotiate what you don't know.
Yeah, we need to see it. That being said, most of the time, people are not hiding assets on purpose. So again, if you want to try to stay on the amicable side, maybe try to keep that in mind first. I mean, lots and lots of people go through job changes constantly. And I think some of those hidden assets are actually forgotten 401ks, right? Just as an example. Sometimes people hide stuff on purpose. You would agree too, I think, that most of the time people don't hide it on purpose, but it needs to be found to be negotiated.
100% agree. And I will say, even of all of my clients, you know, what some people consider hiding is stuff that they don't, like you said, aren't aware of. And that's really, really true. If you have a spouse who's in the corporate world, there are kind of so many different things built in, whether it's bonuses or it can be, you know, vested or not yet vested stocks, or it can be, you know, there's a myriad of things. So again, this is why having a conversation with financial professionals like a CDFA, like Josephti, is so important so that you can kind of go through your checklist to see. But I would say, no, you can't negotiate assets that are hidden because you don't have all the information. And that needs to come out during the financial discovery process. And if it doesn't, there are some sleuthing things that you can do. Please don't agree to anything if you don't know everything that you actually are entitled to. So I dropped in my case, I am more financially stable and making more than my husband. Do I need to pay spousal support? Is this also negotiable? I'm going to jump in really quickly and just take this. Look, the laws vary state by state.
Yeah.
I want to start by saying, number two, the person that you really need to ask is a local family law attorney so that you're familiar with what the laws in your state are. Having said that, yes, of course, depending on what the laws in your state are, there's wiggle room for negotiating on spousal support as well. One of the biggest things is if you are required by your state to pay spousal support, the difference between ongoing monthly payments or proposing a one-time buyout, you want to check if any tax implications there are, but hopefully that helps answer that question.
It depends on the state. Some states don't have spousal support, period.
Exactly. Can I request the pension and financials from his company? Okay, here's what I'm going to tell you. You should be working with a quadra specialist, right? A quadra specialist is somebody who, if there are pensions involved and other retirement accounts, that's a person who comes in and they are going to assess what is split between the two parties, as well as, projected values. And they submit their report, which is a part of the judgment that gets filed. And because of that tells those institutions, like that's then sent to the institutions. So they
Right.
have their legal instructions to split those accounts, number one. And now I'm going to let you jump in, Josephti.
Well, I was going to say, I can calculate that stuff too. And then the quadro specialist, from my understanding, is the one that writes out the document to the pension. But I'm wondering if the question is referring to like, I can't even get the information about the pension. I think you have to probably go through your attorney.
And that should be a part of your financial disclosure process that you and your spouse are going to go through. What I also love about this question is you are obviously keeping a list of what you can't get your hands on that. I think that you can feel overwhelmed if you're just starting the process. This is where I specialize. Like, what do I need to get? What are assets? How do I list them? My whole foundation of my coaching practice is I help you gather all the administrative stuff necessary, help you go through the financials so you have everything in hand necessary to hand over to a divorce attorney or a mediator for them to start working on your case. And when it comes to what you get access to, what you have is just as important as what you don't have, and just keeping a running list of that. When you do that work, then when you go see Josephti, a CDFA, you hand them the same information. And at least on the attorney side, how that benefits you is a few ways. First of all, it's going to cut way back on billable hours. Yes, you've already done everything necessary to hit the ground running, number one. Number two, it activates you to become your own best advocate because you've taken the time to go through everything in advance of starting the process, which puts you in a position to guide the process more. So you're a bit more control of it. And third, it's like you're never going to not benefit from educating yourself and stopping to say, here are my questions. I understand this. I don't understand this. I want to get you comfortable in that, which is another reason I wanted to have you on today, Josephti, because you are another key element in this whole process.
I'll definitely coach you. And Alex does the same thing too in our different areas on, okay, so this is the storyline. This is what your finances are telling me right now. This is what looks realistic. What are your hopes? Can we do that or can we not do that? And I think that's really empowering to just know so that you're not just sitting there with your attorney, not really understanding or feeling uncomfortable because you're just not sure. Like, we want you to understand and know what's going on with your finances so that you could stand there confident during the proceedings.
For all my ladies out there, please know this doesn't have to be overwhelming. This doesn't have to be something you have to do by yourself. And yes, the stakes are high, but the support that we can offer and that's available to you out there is real. Take advantage of it. Invest in yourself and invest in your future. Josephti, thank you so much for your time today.
Thank you, Alex.
That's a wrap on today's episode. I hope you found it helpful. For more free resources, check out my blog at www.thedivorceplanner.net/blog. You'll find articles on how to emotionally and financially prepare for divorce, gain insights into the process from divorce experts, and empower yourself with tips and tools that make your divorce journey easier. And you can follow me on Instagram at the.divorce.planner, on Facebook at Divorce Prep, and on YouTube at The Divorce Planner for daily divorce prep tips and support. I've helped hundreds of clients and thousands more with my digital divorce prep tools prepare for divorce, and I'd be honored to support you too. I'm Alex Beatty, and this has been the Divorce Planner Podcast. Until next time, remember, divorce is hard. Preparing for one doesn't have to be.